What's up, homies? Welcome to another episode of the Homeys Real Estate Podcast. This is your host, Anthony.
I'm Angel.
I'm a realtor.
I'm a lender.
And together, we're going to break down this crazy real estate market. It's the beginning of the month. What time is it, Angel?
It's market update time.
Time to go over those market updates. The data for February just came in. We're going to go over Los Angeles County. Did prices go up? Did they go down? Is it a good time to purchase? What do interest rates look like? We're going to cover that in this podcast. So as usual, we're going to go rocket rounds. I'm just going to go over and then me and Angel will dissect it and then give our opinions as to what's going to happen in the future and some advice. So let's talk about the median sales price. In Los Angeles County, the median sales price is now $834,000. That increased about $9,000 since January 2022. It's up $84,000 since February of 2021. That's 11.2% more. When we look at median price per square foot, another indication of price, it did increase quite a bit, $19 per square foot more than January of 2022. And it's up 15.7% compared to February of 2021, which was at $496. So you can see, it increased about $78 since then. When we look at inventory, the amount of active listings available, we can see that it's starting to increase, right? But we're still at quite a deficit of what we've seen in the previous 5 years. We have about 8,001 active listings as of February 2022. In February of 2021, that was 11,545. So that's 30% less. And when we look at just 5 years ago, we were averaging around 17,000-ish, and now we're at 8,000. So you can see, we're about 2.5% or 2.5 times less active listings right now on the market than what we had in the previous 5 years. When it comes to February, when we look at inventory month supply, if there was no more homes listed in Los Angeles County, it would take 1.3 months for the current inventory to be sold. Now that's extremely quick in a balanced market. We're talking about 5 to 6 months. And in a buyer's market, which we haven't seen in a very long time, since like 2011, and from 2009 to 2011, it would be 6+ months. So you can see we're in an extreme seller's market. It's never been a better time to sell your home than now. When we look at days on market, right? Another good indication of how competitive the market is, we can see that it dropped quite a bit from February of 2022. So since last month, it went from 14 days on market to now 10 days on market. So it's very, very competitive. You want to make sure that you're pre-approved ahead of time, making a very, very firm offer so that you have a very good chance of at least getting a counter. Now, when we look at February of 2021, right, one year ago, it was about 12 days. So it's about 2 days more competitive, but historically, it's still quite a bit more. Historically, we've been looking at around 20 to upwards of 35 days for February. So you can see that homes are selling a lot faster than what we've seen in the previous 5 years. And then the last quick little data that we're going to go over is closed volume. So the amount of homes that were sold in February multiplied by the sales price. This gives us closed volume. Now, closed volume, it reached an all-time high for February. That's $10.35 billion of closed volume. Now, that's up about 4% from a year ago. And of course, the biggest factor for this is that homes are selling for record prices, even though there are less homes being sold than there was in previous years. So that's our rocket round right there. Angel, what stood out to you the most?
Pretty much all of it, right? It's like the days on market are back to under or at 10 days, right? I was expecting that to be about around 13 or 14 days, stay in that same pace.
Yeah.
4 days is a big drop, right?
That is a big drop.
What else was on there? The amount of, what was it? Are
you talking about inventory month supply or?
Inventory, which the one I was going to look at? Average sales price, excuse me. That was also
median sales price,
excuse me. Also went up, right? So I'll speak on it real quickly in regards to interest rates, right? Interest
Sure.
rates, January, since the beginning of the year, they've gone up. February, we saw a big hike in rates. Average interest rate in a conventional loan was over 4%. FHAs now we're in the mid to high threes, just depending on different situations. Obviously, every borrower's situation is a little different. So to me, I was like, this has to bring not necessarily bring the prices down, but at least stabilize them a little bit.
Yeah.
Price. I mean, it didn't go up a lot, but it still did go up considering the interest rate hikes. I was thinking, hey, homes might stay on the market a little longer now, or stay about the same. They've gone down. So it's very, very interesting. I was having a conversation with a potential client that wants to get qualified yesterday. We were talking for about 25 minutes, and I was explaining to him all the reasons as to why the houses are not going to drop. He was confident that he's like, something has to happen. And I told him, I said, I agree as a consumer like you guys who don't work on the field on a daily basis, you guys would assume that as well.
Yeah.
But statistics are showing and the forecast is showing that the real estate market is not going to slow down. There's not enough inventory, right, to meet with the demand right now, despite what the interest rates are looking like. So yeah, that's really my take on it.
Yeah, absolutely. So that's a really good point there. Interest rates, that affects purchase price, right? Just because when interest rates are higher, you qualify for less. You can now bid less for a home, which consequently homes sell for less. So theoretically, homes should be selling for less than they were in January and in December, just because interest rates are about 1% more now than they were just in November, which is crazy to think about. That interest rates increase so fast, so quick, so quick. Another thing that really, really sticks out to me, Angel, that you pointed out is the inventory deficit that we have right now. Like, it's crazy to think that we have about 2.5 times less inventory that we had, from 2017 to 2020, right? Pre-pandemic, right? And then even just 1 year ago, we were looking at about almost 50% more listings than we have right now. So it's unless something drastic happens and we start to get, a flood of homes hitting the market, it's going to be another year with strong appreciation, right? Where very, very competitive. It's going to be difficult to get your offer accepted. And that's okay. Just got to keep your head up, continue to put those offers out. If you're a seller, there hasn't ever been a better time to sell than now, right? We can't guarantee that homes are going to continue to appreciate, but what we can say is interest rates are probably going to continue to go up. The Fed has announced a couple interest rate hikes. So as interest rate hikes continue to impact mortgage rates, that in theory should impact how much buyers will start to bid for homes. So
one thing I'll mention in regards to rates and in the market, because I've been getting this question already too a lot, is what's going on in Russia and Ukraine and a potential world war and all those things. Does that affect the market, right? And it potentially could affect the market, right? So I think if that does get to that point, then honestly, they're gonna want to keep our economy afloat to fund the military if something were to happen, right? So that's something to keep in mind. I get that question a lot. At the moment, we can't predict what's going to happen with that whole situation, but I've gotten that question almost every day since this whole Russian-Ukraine stuff been going on. So it is something to keep in mind that it could potentially affect the market. And then the second thing I want to say, back to the conversation I had with that client yesterday, Anthony mentioned, we need more homes if there's a flood of homes on the market coming in, right? And he kept thinking, there's going to be a bunch of foreclosures. There's going to be a bunch of foreclosures coming up. I don't think that's going to happen, right? So, and I think we've talked about it on previous podcasts, is even if there were homes coming on the market from foreclosures, we gladly need them. So we'll gladly take them on.
Man, we'll take those foreclosures. Trust me.
Yeah,
we'll take.
exactly.
I want those foreclosures. And if there's foreclosures hitting the market, trust me, homies, you'll be the first to know. Yeah. But as of right now, we're not seeing them. Yeah, we're just not seeing them yet.
So, but yeah, that's something to keep in mind. I think a lot of people have that idea, and especially like if you go on Zillow, Redfin, they always have these pre-foreclosures. that doesn't mean anything. Pre-foreclosure means nothing at all until it's actually foreclosed upon, which still can take a long time to actually foreclose on a property.
Yeah, absolutely, Angel. So all in all, what we can expect moving forward is home prices to continue to appreciate just because there's so much buyer demand, so little inventory. And although interest rates are climbing up, there isn't enough supply versus demand to state, or I guess to predict or project that home appreciation is going to go down. So that's where we stand. I don't anticipate home appreciation to be very, very strong like we had last year. Last year, we're looking at like 18, 19, 20% year over year. I think it was 19% throughout the United States year over year. And in LA County, a little bit higher. I anticipate it being roughly around 8, maybe 10%, which is still a really strong appreciation.
Very good.
If you're a buyer and you're looking to trade up, it's a really good time to trade up. Again, if you take, let's just call it 10% appreciation because it's easier to round, right? If you take 10% appreciation of a $500,000 property, that's $50,000. But if you trade up to an $800,000 property, take that same 10% appreciation, that's $80,000. That's a difference of $30,000. That's a lot more equity that you're getting, right? So again, people would say it's a seller's market because homes are going to sell for record prices, but it's also a buyer's market because you're purchasing knowing that your home is probably going to be worth more in a year just because of the way the market dynamics are.
Yeah.
So that's our take. Angel, where can we find you at?
At Your Mortgage Angel on Instagram.
At Your Mortgage Angel on Instagram. You know where to find us, at the Luevanos Group. If you want to check this out on YouTube, 100% recommend it. We're going to put the charts on YouTube. And if we just recently created a ebook to help you buyers out because I know it's frustrating out there, and it's 5 secrets to help you secure a good deal in this real estate market. And trust me, they work. They've helped one of my buyers actually recently secure a home $17,000 less than what the home appraised for, which is amazing in this market. Absolutely incredible. So feel free to check it out. I'm going to put it in the link of this video. You can also check it out on our website or on our link tree. There's a lot of places where you'll be able to find it. And with that said, homies, I want to wish you all the best. Take care and stay safe.
Thank you.
Hey, homies, it's Anthony. This podcast contains my opinions and is for educational purposes only. It does not guarantee any projections and should not serve as a basis for any purchase or sale in real estate.